Hello. In the previous classes, we discussed about the concept of flexible budget. So today in this session, we will discuss that how a flexible budget can be prepared, right, with some examples. So let's start with the first example. So here are some information given. Prepare a flexible budget for overheads on the basis of the following data. Ascertain the overhead rates at 50% and 60% capacity. So, the information about the variable overheads, semi-variable overheads and fixed overheads are given in the chart. So, variable overheads at 60% capacity, it is indirect material, it is completely variable, 6,000, labor 18,000, same variable overhead is 40% fixed, 60% variable. At 60% capacity, it comes to 30,000. Repairs is 80% fixed and 20% variable. At 60% capacity, it comes at 3,000 rupees, 3,000. And there are fixed overheads also. Depreciation is fixed overhead amounting 16,500. Insurance 4,500. Salaries 15,000, total overheads 93,000, estimated direct labor hours 1,86,000. So these are the information given, right? So we need to calculate the overhead, variable overhead at 50% and 60% capacity. So how we can do that? What are the steps, right? So to prepare the flexible budget for overheads, at 60%, 50% and 60% capacity, we will calculate the variable and fixed portions of each type of overhead and apply the appropriate proportions for each capacity level. So first is that identify and separate overheads. So now in the problem it is given that variable overheads which are fully variable with production levels, they are indirect material and labor. There are same variable overheads, that is which varies with the level of production but not proportionately, right? Partially variable, partially fixed. Like electricity is there, which is 40% fixed and 60% variable. Repairs is there, 80% fixed and 20% variable. There are fixed overheads which doesn't change, remain constant regardless of the capacity utilization, depreciation, insurance and salaries. So these are the basic information given. So at 60% capacity, the information is given. So at 60% capacity, the indirect labor is given at 6,000 and labor is given at 18,000. The semi-variable overheads at 60% capacity, electricity is given 30,000. So out of which it is given in the question that 40% is fixed. So 40% into 30,000 comes to 12,000, which is the fixed portion, which doesn't change with the change in level of capacity. The variable portion is 60% into 30,000, that is 18,000 at 60% capacity, which varies with the level of capacity utilization. Repairs is another semi-variable cost, where fixed portion is 80% into 3,000, that is 2,400. Variable portion is 20% into 3,000, that is 600 at 60% capacity. And fixed overhead, which doesn't change with the level of capacity, is depreciation 16,500, insurance 4,500 and salaries rupees 15,000, right? Okay. Now we need to calculate this overhead at 50% capacity. Now it is so we need to see that how this overhead cost will actually react. So we discussed earlier also, if you remember, while we discussed the CVP analysis, that variable cost vary proportionately with the level of capacity utilization. So the variable overheads which are given here, indirect material and labor, they will decrease proportionately. So we are coming from 60% to 50%, so it will decrease proportionately. Same variable overheads, electricity and repairs, it is partly fixed, partly variable. It will of course decrease, but not proportionately, right? And the fixed overheads, the depreciation, insurance and salaries, they will not change even if the level of capacity utilization is changing, right. So, that is a kind of cost behavior we should observe, right. So, at 50% capacity, the variable costs will reduce proportionately, but fixed portions remains the same, right. So, the variable overhead at 50% capacity, at 60% the indirect material is 6,000. So, it will be 6,000 divided by 60 into 50, it comes to 5,000, right. Labor 18,000 divided by 60 into 50, that is 15,000, right. Same variable overheads, electricity, the fixed portion, it will not change, this 12,000, this will not change. The variable portion 18,000 by 60 into 50, that is 15,000, this will change, right. So, when the capacity utilization will fall, the variable portion of electricity will fall. So, total electricity will be this 12,000 fixed plus 15,000 variable. So, 27,000 when the capacity utilization is 50%. Okay. Repairs is another semi variable overhead, in which the fixed portion 2,400 which we calculated earlier, that will remain unchanged, right. The variable portion will change proportionately. So, 600 divided by 60 into 50, that is 500. So, total repair will be 2,400 fixed plus 500 variable, so 2,900. And the fixed overheads, depreciation, insurance and salaries, they will remain unchanged. So, you see here it is 16,500, it is 16,500, 4,500, 4,500, 15,000, 15,000. So, this is not going to change anymore, fine. So, if I have to calculate now the overhead rates, right, at each capacity, how we can do? So, at overhead at 60% capacity, it will be total overhead is equal to 6,000 indirect material plus 18,000 labor plus 30,000 capacity plus 3,000 repair plus 16,500 depreciation plus 4,500 insurance plus 15,000 salaries. So, total is 93,000. And rate, if I divide the overhead, total overhead by the number of hours, I will get the overhead rate. So, 93,000 divided by 1,86,000 is equal to 0.50 per hour, right. So, this will be my overhead rate at 60% capacity, okay. But if we go for 50% capacity, then the total overhead, the variable portion will change as we calculated earlier. So, indirect material will be now 5,000, 15,000 will be labor, 27,000 will be electricity, 2,900 will be repairs, 16,500 depreciation, the fixed overhead, 4,500 insurance, the fixed overhead, and 15,000 salaries, fixed overhead. So, total is coming 85,900. This 85,900 divided by 1,55,000 hours. So, it comes to 0.55 per hour, right. So, this will be my overhead rate per hour, okay. Now, I can write this in a tabular form. So, you can see here, this is 50% capacity, this is 60% capacity, right. This is the flexible budget for overheads, right. So, indirect material at 50% capacity, indirect material 5,000, labor 15,000, semi variable overhead of which 40% is fixed 27,000, repairs at which 80% is fixed 2,900, depreciation 16,500, insurance 4,500, salaries 15,000, total overhead if I add, then it will be 85,900. So, overhead rate per hour as we calculated, it will be 0.55 rupee, okay. At 60% capacity, indirect material will be 6,000, labor 18,000, 30,000 is my electricity, which is 40% fixed, repairs is 3,000, which is 80% fixed, depreciation 16,500, insurance 4,500, salary is 15,000, total overhead is 93,000, so overhead rate is 0.50, right. So, this is my overhead rate now. Okay. So, this is the flexible budget for the overhead for 50% capacity and 60% capacity. So, just to have a recall that what we are doing, all the expenses we are categorizing into three parts: variable, semi-variable and fixed. The fixed overheads doesn't change with the change in level of capacity utilization. The semi-variable ones change, but they don't change proportionately because part of it is fixed, and variable overheads, they change with the level of capacity utilization at a proportionate level, right. So, we can do it like this, right. One thing you can observe here, that the overhead rate is higher in case of lower capacity utilization. Then here where the capacity utilization rate is higher at 60, right. The reason is why it is higher, because this part, this fixed overhead part and the fixed portion of the semi-variable overhead, this is not changing, right. Even if the capacity utilization is less, right, even if the number of hours is less, the fixed portion of the overhead, it is not changing. So, what is happening? It is pushing up the overhead rate to the higher side. Okay, fine. You can try this problem with a 70% capacity level on your own, and you can check out that what is the overhead rate you get at say 70% or 80% or 90% capacity level. Okay, so this was our first problem. Let's go to the next one. Second problem, the expenses for this budgeted production of 10,000 units in a factory is given below. Direct material 70 per unit, direct labor 25 per unit, 70 per unit, 25 per unit, variable overhead 20 per unit, variable fixed overhead for 1 lakh, it is 10 per unit, right. 10 lakh is the total value, this is rupees 10 lakh, that is the total fixed overhead. Variable expenses 5 per unit, selling expenses 10% fixed, so this is semi-variable, it is 13 per unit. Distribution expense again semi-variable, right, 20% fixed, it is 7 per unit. Administrative expense, it is fixed 50,000. So, 50,000 divided by 10,000, so it comes to 5, and if you add all these costs, you are getting the total cost per unit, that is 155. So, the question is, we need to prepare a flexible budget for 8,000 units and 6,000 units, right. So, this is what we need to do, right. And you can observe here also, like the previous question, there are three types of problems. A few problems like direct material, direct labor, variable overhead, they are variable in nature. Few expenses like fixed overhead, administrative expenses, these are totally fixed in nature, and selling expenses, distribution expenses, they are partially fixed or semi-variable in nature. So, now the question is this first column, this is given, right, this is given. We have to find out the budget for 8,000 units and 6,000 units, fine. What we can do is, as we have seen in the the earlier problem, the variable cost will vary proportionately. So, variable cost, direct material is the first major variable cost. Here it is 7 lakh for 10,000 units. So, for For 8,000 units, it will be 5,60,000, right? We can calculate it. 7 lakh divided by 10,000, that is 70, right? So this is actually 8,000 units into 70, right? It comes to 5,60,000, right? And if you multiply 6,000 units into 70, then you will get 4,20,000, right? So these are completely variable costs. Direct labor also per unit is 25. So it is 25 into 10,000 is 2,50,000. So if you multiply, say, I'm writing here 25 into 8,000, right? So 25 into 8,000, that is rupees 2 lakh, and 25 into 6,000. So if we do like this, 25 into, if we do like this, 25 into 6,000, so you will get 1,50,000, right? So you will get 1,50,000. Similarly, variable overhead is 20 rupees per unit. So 20 into 10,000 is 2 lakh, 20 into 8,000 is 1,60,000, and 20 into 6,000 is 1,20,000, right? So direct expenses, right, or variable expenses, this is 5, right? 5 per unit, it is given 5 per unit. So 5 into 10,000 is 50,000, 5 into 8,000 is 40,000, and 5 into 6,000 is 30,000. Fine. The next item is selling expense. Selling expense, you can see it is 10% fixed, right? 10% fixed. So we can calculate the semi-variable cost at 10,000 level. The selling expense is coming 1,17,000, right? So 10% fixed means out of 13, it is 1,30,000. Selling expense, the variable portion is 90%, right? So 90% if you calculate of selling expense, it will come to 1,17,000, right? The selling expense at 8,000, it will be 93,600, and at 6,000, it will be 70,200. For distribution expenses at 10,000, it is 56,000, 44,800, and 33,600. So if you add all these variable costs, you will get for 10,000 it is 13,73,000, for 8,000 it is 10,98,400, and for 6,000 it is 8,23,800, right? Then we come to the fixed costs, right? In fixed cost, the fixed overhead is completely fixed, right? Completely fixed. So completely fixed means 1 lakh will be here, 1 lakh will be here, 1 lakh will be here. It will not change because of change in capacity utilization level, right? Then selling expenses is 10% fixed. So you can see here, for if it is 13, so we can do a rough calculation here. So if it is per unit, it is 13. Then for 10,000 units, the total selling expenses will be 1,30,000, right? Out of which 10% is fixed. So it is coming to 13,000. So this is fixed. So it is coming here, 13,000, it is fixed. So out of 1,30,000, 13,000 is fixed. So variable is how much? 1,30,000 minus 13,000. Sorry. 1,30,000 minus 13,000. So it will come to 117,000, which is coming here. 117,000, right? So 117,000, 1,17,000 for 10,000 units. Now you see this total, the variable part of the selling expense is 1,17,000. So this is for 10,000 units. So for 1 unit it will be 1,17,000 divided by 10,000 is equal to 11.70 per unit, right? So if you multiply this 11.70 into 8,000, right? If you multiply this, then you should get 93,600. And if you multiply 11.70 with 6,000, you should get 70,200. And if you add all these variable costs, you will get at 10,000 total variable cost will be 13,73,000. For 8,000 it will be 10,98,400, and for 6,000 it will be 8,23,800, right? Now in case of fixed cost, the fixed overhead is 1 lakh, which will remain same, right, which will not change. The selling expenses is fixed part is 13,000, right, we calculated here, that will remain same. For distribution expenses, it is 20% fixed. So for 10,000 units, if it is per unit is 7 rupees, then for 10,000 units, the total distribution expense is 7 into 10,000, that is 70,000. 20% of 70,000 is 14,000, right? So this will be the fixed part. So 14,000 will remain same at all capacity levels, right? And then administrative expenses will come up. The administrative expenses is 50,000, it is given here, which will remain fixed at all levels. So if we add all this, the fixed component, I will get 1,77,000 for 10,000 capacity, 1,77,000 for 8,000 capacity, 1,77,000 for 6,000 capacity. And if I add this, if I say this is A and this is B, if I add this, I will get the total cost, right, A plus B. So it is 50,000 for 10,000 capacity level, 12,75,400 for 8,000 capacity level, and 10,800,000 for 6,000 capacity level. Okay, so this is my this is how the flexible budget is complete, right? Okay, so we completed 2 problems now. Now we are moving to the third problem, right? The information relating to the budget prepared for 2 levels of capacity utilization is given below, right? Capacity is 60% and 100%, right? So output is 36,000 units and 60,000 units. Material 3,60,000, 6 lakh. Direct wages 2,16,000, 3,60,000. Production overhead 5,40,000, 7,56,000. Administrative overhead 1,80,000, 1,80,000. Selling overhead 1,44,000, 1,92,000. Prepare a flexible budget for 70%, 80% and 90% capacity utilization, showing clearly the fixed cost and variable cost and the total cost. So again, in this case also, what we will do, we will classify the cost into variable, semi-variable and fixed. So to prepare a flexible budget for 70%, 80% and 90% capacity utilization, we will first classify the cost into variable and fixed components, right? So here material, it is what? It is variable cost. Direct wages, variable cost. Production overhead, semi-variable. Administrative overhead, fixed cost. Selling overhead, semi-variable cost. So what is the step 1? The step 1 is determine the variable and fixed components. So material at 60% capacity, 36,000 units, it is 3,60,000. 3 lakh 60, okay, sorry, 3 lakh 60. So, at 100% capacity, it will be 6 lakh, right. Therefore, variable cost per unit is 6 lakh by 60,000 units, so rupees 10 per unit. Direct wages at 60% capacity, 2 lakh 16, 100% capacity, it will proportionately increase, so 3 lakh 60. Therefore, variable cost per unit for wages, it is 3 lakh 60 by 60,000, 6 per unit. Production overhead variable proportion, at 60% capacity, total production overhead 5 lakh 40. At 100% capacity, total production overhead 7 lakh 56,000. Difference between 100% and 60% is 7 lakh 56,000 minus 5 lakh 40,000, so 2 lakh 16,000. So, this is the variable portion of 40% capacity increase. Therefore, the variable production overhead per unit will be 2 lakh 16 by 24,000, so 9 per unit, right. So, this will be the variable production, right. So, what is the fixed portion? Fixed portion will be total production overhead at 60% minus the variable portion at 60%. So, variable portion at 60% will be 36,000 units into 9, so 3 lakh 24,000. Therefore, the fixed portion will be 5 lakh 40 minus 3 lakh 24, so 2 lakh 16, right. Administrative overhead, fixed overhead is 1 lakh 80. It is same for 60% and 100% capacity. Selling overhead, total selling overhead at 60% capacity 1 lakh 44. Total selling overhead at 100% capacity 1 lakh 92. Difference is 1 lakh 92 minus 1 lakh 44, so 48,000. This is the variable portion because it is varying with the level of production when capacity is going up from 60 to 100%. So, this is the change. So, this is my variable proportion. So, variable cost per unit for selling overhead is 48,000 by 24,000, it is 2 per unit. Fixed selling overhead will be what? Total selling overhead minus variable overhead. So, total selling overhead is 1 lakh 44 minus 36,000 into 2, that is 72,000, right. Okay. So, this will be my fixed selling overhead. So, now I can create the flexible overhead at 60%, 70%, 80%, 90% and 100% capacity utilization. So, first one it is 60%, 70%, 80%, 90% and 100%. 36,000 units, 42,000 units, 48,000 units, 54,000 units and 60,000 units. So, variable cost is 3 lakh 60, per unit is 10, 4 lakh 20, per unit is 10, 4 lakh 80, per unit is 10, 5 lakh 40 and 6 lakh, right. So, 36,000 into 10, that is 3 lakh 60, 42,000 into 10, that is 4 lakh 20. So, we can calculate. Direct wages also we can calculate like this per unit. If you remember, we discussed in CVP analysis that in variable cost, the per unit cost does not change. What changes is the total cost, right. So, per unit cost you see it is remaining same here, right. It remains same, right. What is changing is the total value, right. So, direct wages I can calculate simply like that, 36,000 into 6, 42,000 into 6, 48,000 into 6, like that, right. The production overhead, the variable portion we calculated is 9 per unit. So, 9 into 36,000, it is 3 lakh 24, 9 into 42,000, so it is 3 lakh 78, 9 into 48,000, that is 4 lakh 32, etc. Okay. Selling overhead, the variable portion is 2 per unit. So, 36,000 into 2, 72,000, 42,000 into 2, 84,000, 48,000 to 96,000, we can calculate, right. Similarly, we can calculate for this also. So, 60,000 into 2, it is 1 lakh 20,000. If we add this, we will get the total variable cost. So, 3 lakh 60,000 plus 2,16,000 plus 3,24,000 plus 72,000. If I add, so I will get 9,72,000. Similarly, by adding these columns, I am getting at 70% capacity 11,34,000. By adding this, I am getting 12,96,000. Adding at 90%, the total variable cost is 14,58,000, and 100%, the total variable cost is coming at 16,20,000. Fine. So, we can calculate the total value of the variable cost. The fixed cost we discussed earlier many times, that it will remain unchanged even if the change in production capacity. So, it will be 2,16,000, 2,16,000, 2,16,000, 2,16,000, 2,16,000 in all the 5 capacity levels, right. Now, for administrative overhead, it will be 1,80,000, 1,80,000, 1,80,000, 1,80,000, 1,80,000 in all 5 capacity levels. Selling overhead, the fixed portion, it will be 72,000 for all capacity levels, right. And if I add, the total fixed cost will also remain same at all capacity levels, that is 4,68,000. 4,68,000. Now, if we add this total fixed cost along with total variable cost, right. If I say that it is total variable cost, this is A, right, and total fixed cost, this is B, and if I add A plus B, if I do that, I will get the total cost, right. So, at 100% capacity, the total cost is coming at 20,88,000. As we discussed earlier, the purpose of flexible budget is to understand, right, and analyze that if we change the level of capacity utilization, how the total cost is going to be changed, right. And you must have observed till now, after solving these problems, that if the component of fixed cost is higher in the cost structure, right, then the total cost, then at a higher capacity, right, the company enjoys an economy of scale. So, the per unit cost, right, per unit total cost, it gets reduced. You see here, in this case, right, the per unit cost at 100% it is 34.8, whereas at 60% it is 40, right. This is happening because of the existence of this fixed cost component here, right. If all the costs are, I keep variable in nature, or most of the costs I keep variable in nature, then what will happen? The total cost will also increase and decrease proportionately, and per unit cost will not change much, because we already discussed that the per unit variable cost, it remains unchanged even if the capacity changes, right. But if the fixed cost component is higher in the cost structure, then what will happen? As we move towards the higher capacity utilization level, so the per unit cost, it is going to fall. You see here it is 40, right, and here it is 34.8, though the total cost will go up. Fine. So, if the product which I am manufacturing has good demand, and if I produce at a higher capacity level, it is always better to keep a component of fixed cost in the cost structure. In that way, I can keep my total cost per unit on the lower side, and we can what we can do is we can use it for better pricing. Okay, thank you.